Hello everybody. In this video, we are going to discuss about Trident stock. Trident is one of the largest towel manufacturers of the world and one of the largest agro-based paper manufacturers and one of the largest yarn producers in India. The operations of the company are segregated into four main segments: wiz yarns, terry towels, paper and chemicals. With the changing industrial needs, the company has also ventured into specialized product markets. Battery grade sulfuric acid is the premium quality product to cater to this market. Commercial grade is also manufactured, keeping in view the largest market share. Leading battery manufacturers, leading battery manufacturers are and high-end consumers are also clients of this product. Let's see some fundamentals of this company. Let's see returns of the Trident Limited stock. In 10 years, the stock has given 1,369% of returns. That's amazing. In 5 years, the stock has given 353% of returns. That's amazing. In 4 years, it is 134. In 3 years, it is 239. Awesome. In 2 years, it is 278. Nice. In 1 year, it is 204. Awesome, yeah. In 6 months, it is 41%. In 3 months, it is 47. In 1 month, it is 23%. In 1 week, it is 18%. Wow. In 1 week, it has given 18% more than like bank FDs and all. Awesome. In 1 day, it is down by 1.69%. So the market cap of this company is 10,000. Stock PE is 31. Return on capital employed is 10. So that is very bad. That's a negative sign. It is very low. PEG ratio is 4.92. So according to PEG ratio, the stock is highly overvalued. For those who don't know what is PEG ratio basically calculates PE of the stock and the profit growth of the stock. It's divide both of them and calculates it. It should be 1 or below 1. Below 1, if it is below 1, it is considered that the stock is undervalued. If it is above 1, it is overvalued. So here it is 4, so it is highly overvalued. The stock is highly overvalued. So let's see further. We'll discuss about this later. The return on assets 5.69. It is very low. The company is not managing their assets well. The returns from assets are very low. That's a negative sign for the company. The current price is 20 rupees. Don't invest by saying stock price. It is not low according to fundamentals. The stock is overvalued. Okay, people. Book value is 6. Book value is interesting. Return on equity is 10. It is very bad. Low. I considered it should be at least 20, but here it is 10. Profit growth, there is no profit growth. This may be due to corona, so we can avoid this for some time. Earning per share, it is 0.60, not 1 rupees also, so you can consider that. High, you can see over here 20 and 6. This stock was like fairly valued on rupees 6, but now it is highly overvalued according to me. On 20 rupees, this stock doesn't deserve 20 rupees. Dividend yield, this is interesting, 1.79. The company is paying dividend to its investors consistently, and the dividend yield is good. But don't invest for dividends. That's a warning sign. Face value is 1. Debt to equity ratio is 0.46. That's a positive sign. Plus point for the company. The debt is not that huge, and the company is consistently reducing their debt. I'll show you. Price to book value 3.9. Interesting. You can see over here the company's sales are also increasing. 1 second, people. In 5 years back, the sales were 3,666 and now it is 4,728. So there is increase in sales. Operating profit margins, if you'll see, it's close to 20. So that's a good sign. Operating profit margin, that's a good sign. Let's move further. Net profit, we'll see the net profit, people. If you'll see, 5 years back it was 242, then 337, and now it is 304. So there is not a big jump in profit. If you'll see 5 years data, there is no big jump. So let's move further. Company is performing well, but there is no big jump. Earning per share, if you'll see the earning per share, there is not a big jump in earning per share too. So if you'll see that, it is not interesting at all. Let's move further. Let's see balance sheet reserves of the company. The companies having good reserves, like very huge. If you'll see 5 years back, they were like 2,259, then 2,228, slightly decreased, and now it is 208.19. So they have increased a bit, and that's a good sign. But one more plus sign is the company is consistently reducing their debt. If you'll see from over here, it was 3,500, then 2,849, then here down, then it came down to 2,000, and it is 1,562. So that's a plus point for the company. The company is consistently reducing their debt, so that is a good sign for the investors. I appreciate for the company for doing that. Total assets the company is having right now is 5,072 crores. These figures are in crores for those of you who don't know. Let's see cash from operating activities is the important thing. In 2016 it was 532, then there is a big jump, almost double. So 999, 1000 crores. Then there is a big downfall, 476, then 659, 1214, 508 crores. So it is not consistent. Actually, it is going up down. So this company's operating cash flow is not consistent. As you can see, the shareholding pattern, if you see, this is the important thing for us. The promoter shares were in 2018 68.45 and 73 now, as of now. So this is the plus point for the company. The promoters are buying more stake in their company, so this shows a positive sign. FII is 135 and now it is 160. The FIIs have increased their stake slightly, not much. DIIs are 2.8 and they have heavily decreased their holdings. They have almost zero. Government, wow, this is 0.92. And public, it was 28 and the public has 22. It is now. So public have decreased their stake in this company. So that's a negative sign. Let's see the conclusion.
So if we see the fundamentals, the stock price is overvalued. The stock price is very high. I think you should wait for a correction to happen. The company is doing good business. They are reducing their debt, and that's a plus point for the company. It's a good sign. So if you want to buy this company, you should wait for a dip in this stock. Then you can consider this stock. As of now, this stock, if you'll see the fundamentals, that stock doesn't look that interesting because the fundamentals doesn't suit the stock price. The fundamentals are not that interesting. They're very weak and the stock price is very high according to fundamentals. So you should wait for a dip. This stock is very risky according to me right now. So don't invest huge amounts. Invest very little amounts. If you want to invest the money which you are ready to lose, because this stock is overvalued according to, and if you'll see the fundamentals, the stock is overvalued. So don't invest huge amounts. It is a very risky stock. I'm saying again and again, don't invest huge amounts. And in the end, it's your choice. And this is not a buying recommendation. You can do whatever you want. Please do your own research and then invest. You can consult your financial advisor before investing. This is not a buying recommendation. Please do your own research. And if you like my analysis, then please do give a like and subscribe. Thank you so much. I will meet you all in the next video. Bye bye, people.